Hey guys, today I'd like to do some hindsight trading. So we're going to look at a specific model and look for it in the charts. And I want to give an example today of the TGIF setup. It's an ICT concept, and it's the thank God it's Friday setup. So first I'm going to do a little bit of explanation about the setup and how you can identify it. And then I'm gonna look for an example in the charts of NASDAQ of last week. So first of all, what is the thank God it's Friday setup? If you follow ICT, you know he uses weekly profiles, and he has all kinds of different weekly profiles, but one of them is that a Tuesday is in 70% of the times responsible for the high or the low of the week. So a weekly profile will then look like this. On Monday, it doesn't matter if this is a black or a green candle, but on Monday, it's just a consolidation day, then a manipulation phase up. So it's the power of 3, how the weekly candle is formed. So it opens, the weekly open is here, trades up, takes the high of Monday out on Tuesday. That creates the high of the week, and then it starts expanding down. So when we're looking for the thank God it's Friday setup, we want to see if it's possible to get a setup on the last day of the week. When the expansion is done, what can we expect for the last day? And there are two possibilities. Either Friday is going to take out Thursday's low and then expand up. So it manipulates down, power of 3 candle, manipulates down, start expanding up, or it only trades within some, maybe like the wick of the Thursday candle and then expands up. And what can we expect of how far it can retrace up? Of course, you can always look for points of interest in the candles, but an easy measurement is if you take a fib from the total weekly range. So from the Tuesday high to the Thursday low, it can expand up into like the 30 or 20 or 30%, and it may even come up to the 50%. Around here. So when can we expect which scenario? Well, I have a thought process that if this candle open on Friday is really up way a lot higher of this low than it's in this example. So here the low is kind of close, right? But here the low is kind of far away. So if you see that it's really far away, it's more likely that it will only trade up maybe like the consequent encroachment of this wick, so the 50%, and then starts expanding up. So if we take this concept to last week on the NASDAQ, and let me see where the chart is, then we can see that the weekly profile was formed over here. This is Monday. Then Tuesday it traded up, and then it started expanding. And how can you make sure this one is finished, right? That Friday, but this is Friday, won't take out this low. So there are a couple of things. As you can see, the distance to this low when Friday opened is far away. So then it's less likely. But how can you also test if it's this Thursday already reached a point of interest? Then it's because the weekly expansion always expands to a point of interest on the charts, right? So if the weekly expansion is in, it's not very likely that it will trade even further on the Friday candle. So when I take a Fibonacci from the range, low, high, the total daily range, swing low, swing high. As you can see on Thursday, price already got to the 50% equilibrium. So it had already reached a big goal. which was also this massive gap on the daily, a massive fair value gap, also called a buy side imbalance, sell side inefficiency. And these get filled all of the time, of course, but also to the 50% maybe. So if you mark out this 50%, it also reached that. But just look at one simple thing, the daily range, it came to the 50%. So it's in discount. It came to discount. So we didn't even need this busy, the buy side imbalance, sell side inefficiency candle. We could already see that it had reached the discount of this total daily range. With that in mind, and also keeping in mind that Friday's open was a long way away from Thursday's low, then you could have looked for longs within the Thursday range. So when we look for points of interest, so below Friday opening, so this was the daily open, you want to look for longs below the daily open. What are the most likely spots? When I measure the wick of this candle, and let me do it like that we get a mark, it's 15204.14. So when I place a line with the 4.14, this was the consequent encroachment of the daily wick on Thursday, right? So let me remove the fib. It did not reach into that. So now we're on a 1 hour chart, and as you can see, this was midnight. In London, it traded up and then it started trading down. But if you know it's not going to go to this low, you can look somewhere in discount for longs. So this is the equilibrium of the range from the Thursday low to the London high. So when it started trading down, this was the spot you could have, and I'm not saying that I traded this is just a hindsight video, right, to learn from it. So what would be the TGIF setup have been on Friday, now in hindsight with the knowledge we have and all the measurements we can do. So this is not hindsight trading or something like this, is hindsight studying, just to see with all the measurements ICT teaches us what we could have done. So let me zoom into the 5 minutes. What are the times over here? Maybe put on some sessions. Let's see. So London manipulated up and then it started distributing down. It manipulated in the quarter 2 and then it started distributing until quarter 4. Then we're in a no kill zone. So this is a no trade zone. Then we had the London open, true open, then it manipulated below these lows and then it started displacing. So in New York AM, this would have been the spot to look for longs because we are below the equilibrium now of the range it created for the day. It probably won't trade lower, or maybe this CE of the daily wick, it did not reach that. Maybe it did on the futures charts. That's possible. That's also something you can look for in the charts. So this manipulated down, and let me zoom in a bit lower. Let me rewind it so I can keep my marker here. So yeah, when it started breaking these highs in the kill zone, you could have looked for longs somewhere in here, right? So let me see if there's anything significant. Not yet, but here it started on the 5-minute break, breaking the high. It's created a fair value gap over here right now in the 5 minutes. So let's just see if this does anything and where can we TP? Well, what I like to do is take the manipulation range from low to high and put on my standard deviations. And I like to reach for the 2.5. So what if I place this at 2.5? Let me see if we have any kind of liquidity up there. So we have these highs. These are a partial. So this is a partial. And then we have these highs up here. That's also just below the 2.5. So let's say this would have been the trade. With knowing that the Thursday or a Friday opening was so high, the candle open, look at this, this is candle open, this is midnight, right? It's so far away from the Thursday low, so it's not likely it's going to take out that one. So it traded into another point of interest, it traded lower, so it manipulated lower to make the expansion of the day up. So with this, oh, it wouldn't even be hit. Wow, look at that expansion move. Let me get the bars in front of my drawings. That's massive. So let's see if there's some sort of retracement. There is. Let me. No, we don't even get a way to get in. Wow. All right. So that would have been a partial. So would there have been a lower time frame entry, or maybe? What some people do, right, is just if it breaks this significant swing high in the 1 minute, right, because this is the last high before the low and then it started displacing up. Some people just market this in. This is also a little breaker block. You could have entered here on the breaker block, right? So that could have been a possibility. This is hindsight trading, so we have to learn from it, right? So on the 5 minute, it didn't give any entries because there was just like one fair value gap and it didn't even tap that one. So on the 1 minute, you could have entered on the breaker. When you really started this candle, really displacing above this high, really change the state of delivery, then maybe you could have thought, well, let me enter somewhere here on this support, on this breaker block, and place a stop below because there's still a lot of inefficiencies in here. So this could have been, like on the breaker, maybe could have been an entry. But on the 5 minute, there was no entry. So let me see, when it came to the partial, what was the reaction over there? And oh yeah, also, of course, look at that. I spoke about the range being between, this needs to be the other way around. Reversed. Oh, that's a different fib. What am I doing? I also spoke about the daily range, right? This was Tuesday high. Being retracing to 20%, 30%, or 50%. Let me remove this daily range. So as you can see, it already tapped the 50%. So that can also be like the take profit point. So you just take profit on the 50% and that's it. So this was the weekly range measured out between Tuesday, Thursday, and then the 20%, 30% or 50% retracement. So when I go back to the 5 minutes, or let me do 15 minutes, will it reach the 2.5? Because those are important standard deviations. Oh yeah, it does. Look at that wick. Look at that wick. To the pip. All right. What time is this? 10:45 a.m. It started retracing really hard from there. But this was the trade. The daily goal is in. This is the TGIF. So you look for a retracement to either Thursday low or somewhere in Thursday range. Look for a kill zone where it at least comes to a discount. Then look for the displacement on 5 minute or even lower on 1 minute and target like the 20, 30 or 50% or important highs or standard deviations. Those are your options, right? So I think this was very insightful to see how the TGIF setup could have played out on NAS. I didn't play it, but it would have been a really nice setup. So thanks for watching. If you want to join the Discord, there's a link in the description. And if you like these videos, please let me know. And maybe you can do some suggestions on what you would like me to make a video about. I cannot guarantee I will do it because I will have a lot of my teachings also into the community. But of course, I want to teach as many people as possible also on my YouTube channel. So leave me a comment and I would love that, and see you in the next. Bye bye.